Strategy's new perpetual preferred offering is possibly the most interesting out of all the STRs. We have STRF, STRK, STRD, now we have STRC, or Stretch is how it's pronounced. I'm going to explain who I think this is for and what kind of capital this is trying to tap. Each one of those that I just listed is trying to tap a certain section of the capital markets, specifically the fixed income markets, and this one is no different, and in fact maybe has a bigger market and a much more interested market than the other ones. My name is Forrest Hodel. I'm a Bitcoin educator, and if you want to book me for a one-on-one coaching session to cover Bitcoin basics or security best practices, or to answer the questions that you might not even know to ask about Bitcoin, you can do so in the link in the description. So here we have the presentation by Strategy. We're going to go through what STRC is, and I'm going to explain it in terms that they don't necessarily put it, but in ways that we can understand it. So Strategy's issuing it. It's called STRC, and it is senior to Stride, Strike, and MSTR common stock, junior to the convertible debt and to Strife. So it's fairly high up on the capital stack, which means that it increases its collateral based on the issuance of the shares below it. The stated amount is $100 per share. Liquidation preference adjusted periodically to the greater of 1, the stated amount per share of Strike, and 2, the fair market value as defined per share of Strike. So Strategy is going to try to fix STRK to the $100 share price. And they're going to do this by issuing more of them for if there's increased demand, or calling back ones if there's a decrease in demand. And they're probably going to do this algorithmically. They probably are going to automate this. And so in a way, I know this is going to scare people, but it's an automated way of making a stable share price product. Cumulative dividends at the initial rate of 9% per annum on the stated amount. So the stated amount is $100. So per year, you're going to get $9 return on this. Subject to adjustment as described below, payable monthly in arrays in cash when, as, and if declared by Strategy's board of directors, out of funds legally available from their payment on the last day of every month to holders of record as of the 15th of every month. 9% per year, and it's paid out monthly in the form of dividends. Our current intention is to maintain a trading level for Strike near its stated amount, near the $100. We may adjust the dividend rate at our discretion with an announcement prior to the first day of the adjusted monthly period. Any such adjustment may adjust the dividend rate from the then current dividend rate upward for any period by any amount and downward by a maximum of the sum of 0.25% per annum, and 2, the maximum decline, if any, in the 1-month SOFR rate from the first business day of the month to any business day during the current month. The dividend rate per annum may not be adjusted to the rate that is below the 1-month SOFR rate in effect on the business day before the date on which the adjustment is announced. So the SOFR rate is the secured overnight financing rate, and it is basically the cost of borrowing cash overnight using US Treasury securities as collateral. So in a way, this is going to always be paying more than the overnight lending rate by the Fed for banks and loans, and that means it's going to pay more than money market funds. If dividends are not paid in full on the payment date, unpaid dividends will compound monthly at the then current rate on the unpaid amount. The dividend rate will no longer vary based on our discretion until all deferred amounts together with compounded dividends thereon are paid in full. Dividends compound on top of each other, and the rate of dividend amount can't go down until those dividends are fully paid off. So these are callable at 101% of the stated amount in whole or in part at any time after STRC is listed on NASDAQ, plus any accumulated unpaid dividends, which means that Strategy can basically force buy these back for 101% of the stated amount at any time. So they could start to unissue these if they wanted to, and that's part of how they will algorithmically keep this stable at that price. So at IPO, the expected Bitcoin collateralization is 7 times. So there hopes to be 7 times as much Bitcoin on the balance sheet than the amount of STRC being issued in dollar terms. So here we go for mechanisms to execute the STRC credit strategy. Strategies toolkit if STRC price at at 101 or above, they can decrease the strike dividend rate, issue STRC via second offering at or below 101, so that's an ATM, call STRC at $101. And then that will take it to the target range of between 101 and 99. And then if the STRC price at below 99 or above, they can increase the STRC dividend rate, which will increase buyers, which will push the price back up, or cease selling strike ATM below 99. So here are some of the markets that this financial instrument could tap into. The first one being money market funds. So if you don't know what you want to invest in, or if you hold some cash on the side, money market funds is something that you can invest in and get that overnight lending rate basically. And it's really, really liquid and very short term. And it gives you some interest on your cash. It's like it's like one step beyond a savings account, and it's investing in really, really short-term treasury bills. So the effective yield on that is 4.2%. So if you can get 9%, which is what they're aiming for to start with, you're going to be doubling the amount of interest rate. And the reason people invest in money market funds is they can get that 4.2%, and their cash is nominally staying the same. If they withdraw, they're not going to have, it's not like a long-term treasury bond or a long-term credit instrument that can fluctuate based on interest rates and credit, perceived credit risk, and all these different things. This is basically exactly, in my opinion, what Strategy is doing, except they're doubling the effective yield, and they're algorithmically keeping it even more stable than a money market fund. Now, the size of this market is $7.4 trillion. There's a huge amount of money in this market, and in my opinion, this is such a better instrument than holding money in a money market fund. If somebody, institution or retail, was to have some cash on the side, they could park it in STRC, and once they saw an opportunity in the market, they could sell that in a very liquid way for the same price that they paid for it without any slippage. And the whole time they held it, they were earning 9%, and then they could use that cash to invest in whatever they wanted and saw fit. So that's exactly the use case for this. Short-term treasury bills, very similar in a sense to money market funds. Maybe they have a slight amount of duration risk or perceived, change. They're not fixed, right? They're going to fluctuate within the market for them, and that market is 5.8 trillion. And you can see the effective yield is almost identical, and that's because money market funds are very similar in a lot of ways to short-term treasury bills. USD bank accounts, there's $18.3 trillion in people's bank accounts. I have no idea why. The effective yield is 0.1 to 4%. And that's the same thing that happens. There's fractional reserve lending within these banks, and they take your money that's in your savings and checkings account, and they invest it. They invest it in things, maybe like short-term treasury bills, maybe like money markets. They give you a fraction of what they earn from that, and that's a huge part of their business. And you don't need to do that if you have this instrument. You don't have to have your money in a bank account earning you less, way less than what you could earn with STRC. Now, the other thing that's interesting here is stablecoins. So this is in some way like a Wall Street financial stablecoin. This is not a crypto rail stablecoin, but in a way it is very, very stable and paying you a interest rate, which stablecoins don't do. So it's not a one-to-one comparison, but people have been talking about how this is Strategy's way of making like a TradFi stablecoin in a sense, except that it's a lot better than stablecoins. The only thing you can't necessarily do with this is transact with it, use it as a transaction layer. But, technically, this could be tokenized, and people could actually start using this as a stable coin on crypto rails, which is kind of interesting. I'm not huge on tokenization, but actually this is the first time I've thought about that for this product, and that could be an interesting possible future. You can see the market for this is only 250 billion. I think the stablecoin market is actually a little bit bigger than that, but effective yield is 0% unless you put it in some yield-bearing instrument that rehypothecates it and creates a whole bunch of leverage within the crypto market. Corporate commercial paper. So this is debt instruments for corporations, 1.4 trillion. Effective yield is 4.3. STRC initial 500 million. Again, they bumped it up to 5 times that basically, and their initial 9.5 to 10%. So this is going to fluctuate, and it's never going to get lower than the basically the money market fund. It's never going to get lower than that. They're always going to have it higher than the SOFR, which the SOFR is connected directly to the money market fund. So initially when this was issued, a lot of people were saying, hey, look at this, MSTY holders, MSTY holders. This is not, you can see there's no covered call yield income ETFs here, right? Those are a completely different instrument. Those have all sorts of different types of risk to them, and they'll oftentimes outperform, at least in the income sense, the monthly distribution sense, more than annually 9 to 10%. This STRC is not competing in that realm whatsoever. That's a bad comparison in my eyes, and these two products again, are completely different instruments. So in my eyes, you could imagine a giant straw going into each one of these, and the person inhaling the capital from each of these through the straw is STRC. STRC plans to take a bunch of the capital out of this and put it into STRC, and therefore have that capital held by MSTR and therefore invested into Bitcoin. This is a huge funnel of this massive amount of money going into Bitcoin. So this is the first time that Strategy's actually completely admitted to getting rid of the convertible bonds. They've been kind of not talking much about them, but you can see here within 3 years, they hope to get rid of the convertible bonds, leaving Strife at the top of the capital stack and STRC second to that, and having a Bitcoin rating of 10x. So in a liquidation event, if you were holding STRC and MSTR collapses for some reason, there's 10 times as much Bitcoin value as there is for STRC at 500 million here. But of course, this is going to increase, but it's going to increase, in relation to the amount of Bitcoin, right? The amount of dollar terms of Strike being issued, or sorry, STRC being issued, Stretch being issued, is going to be lower than the dollar value of Bitcoin, because Bitcoin will outperform the 9 to 10% annualized on average over time. So this rating should get better and better, and all of these ratings should basically become better and better over time. So they IPO'd with the largest IPO of this year so far, $2.474 billion worth of STRC has been issued in the IPO. Their initial offering was 500 million, so they almost 5x'd that. And their offering price was $90 per share. So there was a $10 discount. And again, this is algorithmically going to be pushed to the $100 price. So the people that get in at this, they could immediately sell it onto the market if Strategy is able to keep it near that $100 price and earn 10% just from holding from IPO to the actual NASDAQ listing of this preferred. Now, when that happens, right, they're going to be able to mitigate that selling pressure, if there is selling pressure on this stock, by changing the interest rates again and not doing the ATM, and that will incentivize the market to naturally step in and increase the buying pressure and keep this level. So they're naturally going to rely on the market and the few things they can do to incentivize the market to keep this level at $100, which in my eyes, it's very likely that they'll be able to do this. So who is this for? This is for somebody that has some cash on the side and wants to not have the risk, the downside risk of investing in something in the short term and having it go down in value. They expect to only have this cash for a certain amount of time before redeploying it somewhere. That's who this is for. This isn't for somebody who wants to buy this, get the 9 to 10% dividend, and expect the price of this share to go up in value. That is not what's going to happen. this potentially could be something that somebody could buy and have as a very stable sort of income source in a fiat sense, right? They're getting that 9 to 10%, and they have the ability to liquidate shares if they needed to extra income, or to pass this on after, when they're ready to do so. I'm talking about like in retirement age and beyond, and know that nominally the value hasn't shifted. So it takes out the investment type of risk. That's what money markets are for, right? Is it's taking out the investment risk. Now, money markets typically pay 50% or less in returns compared to the S&P 500, whereas this pays very similar to the average return of the S&P 500, which is between 10 and 12%. This is paying 9 to 10%. So without the risk of investment and the timing risk and all of this, you're getting very similar returns to the S&P 500, which is insane, right? This is an insane product. This is incredibly valuable. And this is going to allow strategy to just create so much inflows to Bitcoin, which bolsters them as a company, increases their balance sheet, and really just allows them to continue issuing all the other shares that they're issuing and continue just creating a massive company with a gigantic moat. I never really saw this exact instrument getting created. I think every time they release one of these, I think, oh, okay, they have the yield curve built out. This was a genius release. I thought that when they released Stride, I thought that when they released Strife, I thought that when they released Strike. And now, again, I think that when they release Stretch, I think this is a genius instrument that they released. And I don't think they're done. I think they'll end up creating more and more instruments that blow my mind when I hear about them, because the people behind this are just thinking this is a chess game, that they are just moves and moves ahead of the rest of the market and the individuals even looking into this space. A lot of this is not predictable in this sense. I think this product is so intelligent, and I'm just excited to see how it does, if they're able to keep it around the $100 share price, which I imagine they will be. And I'm interested to see if this continues to grow in the amount of shares out there, so the amount of interest in deploying capital into this instrument. I will say the other thing too is I do think that will happen based on the amount of interest, right? 5 times the initial IPO. And I saw a downturn in the share price of Strike, Strife, and Stride, which shows me likely that the investors in those are using them in a way that Stretch is designed to be used. So they're using those knowing that there's limited downside to them. They're not actively being managed in a way to keep the share price even, but they effectively can, and they're just not really designed to do that. So there is more investment risk to those, and you could see the investors that bought those not wanting investment risk and dealing with the slight amount of investment risk that was involved in those have moved over to this, which has no perceived investment risk based on how it's designed. So we'll see how this all goes in the coming few weeks. This means that Strategy is getting its hands on $2.4 billion worth of cash, which they'll deploy to Bitcoin as soon as they can. And I don't think they've gotten that yet as of recording. And so we'll probably have to wait and see for that buy to happen. We also saw 80,000 Bitcoin being released into the market, making the Bitcoin price drop only a couple $1,000s. So will we see 2.4 billion buying pressure increase the price of Bitcoin? We can actually see that this market can absorb a lot of liquidity at this stage. So it is buying pressure. The price of Bitcoin will go up because of this, and it hasn't. The purchasing hasn't been happening yet, as far as I understand. And when it does happen, we'll see some price increase in Bitcoin, and we'll just continue to see this institutional underbid of Bitcoin's value, and it not being able to fall much to the downside because there is just so much bid as soon as it happens. This is massive. This will continue being bigger. And I think strategy alone is pushing the envelope of what is possible for a Bitcoin treasury company. And they are the innovators. They're the largest, which is not always the case here. They're the largest in the space, and they are the innovators in the space, which is incredible and makes me continue to be very bullish on strategy and very, very bullish on Bitcoin. Now, I will be potentially rotating into STRC sometime in my trading career, just as, again, holding it for the interest rate and for the non-investment risk of it, and then positioning myself back into positions. But right now, I'm very bullish on Bitcoin. I'm very bullish on strategy. And a quick reminder, I used to say this a lot when talking about MSTR, but I only hold MSTR in registered accounts. Any extra cash that I have that isn't in those accounts already is going towards buying Bitcoin. Bitcoin is the true innovation here, and strategy is buying Bitcoin too. And yes, they can potentially outperform in the way of acquiring more Bitcoin per share and the market rewarding them for that. And they're a different instrument than Bitcoin. And I'm not saying they can't, but in my eyes, Bitcoin has additional value proposition that strategy does not. You can actually own and hold Bitcoin. You can memorize 12 words and bring it with you anywhere in the world. And you can hold a piece of the alternate monetary network that will become the base layer of money in the future. So if you guys want to get yourself some Bitcoin, you can do so in the link in the description. You can also get yourself a hardware wallet, a Bitcoin node, a Stampseed kit, and there's discount links and bonus rewards for every single one of those links in the description. And you can book me for a one-on-one again for any Bitcoin basics and security best practices. Link for that is in the description as well. I'm Forrest Total. This is Bitcoin Not Crypto. We'll see you on the next one.